Hey guys, years ago I knew I wanted to start a podcast, but I knew nothing about how to get started. Add to that, I am horrible when it comes to technology. Thankfully, Spotify had a platform where I could do everything I needed, super easy, and best of all, super free. You see, Spotify for podcasters lets me record, edit, distribute right from my phone or computer so I can get everything done in one place. I can also do video episodes as well, which as a trader helps massively if I want to talk about something on the charts. Lastly, if you're into making money, which, some of us are, Spotify for podcasters makes it super easy to monetize in various ways, including ads like this or subscriptions. So for someone who values my time massively and is always focused on efficiency and productivity, Spotify for podcasters was the perfect fit for me. Give it a try. Oh, and did I mention? It's free! Hey guys, Akil here. Welcome back to another episode of the Trading Coach Podcast. Thank you as always for joining me. If you haven't done so already, please support the podcast by leaving it a rating and a review and subscribing on whatever podcasting app you listen to this on. In today's episode, I want to talk about 3 things that you can stop doing, mostly talking to the new traders, that will help save you time and money. And these were 3 things that I encountered early on in my trading career. I'm sure these 3 things are something that many of you encounter as well. In fact, I do know it because I get a lot of questions on the subject, which is what inspired me to record this podcast today. And we'll start with number 1. And number 1 is going to be Forex Specific. So if you're trading a different market out there, this probably isn't as relevant to you. But number 1 in the Forex market is paying attention to correlations / currency strengths, right? And what I mean is this, right? If you've been anywhere, if you're familiar with the stock market or any financial market, you're probably familiar with what's called like a heat map, right? A heat map is all the sectors, all the individual stocks, however you want to categorize it. And they're red, they're green, they're lighter greens, darker reds, all depending on how the movement is for the day. In fact, many charting platforms have this as well, where you can just kind of put it up on your charting platform. You see these arrows and these flickers, and it looks all cool, and it makes you feel like a trader, right? It's very similar to like the casino, and trading in general is very similar to casino, where they want to inspire this or encourage this gambler's mindset. But if you've ever been to casino, something that kind of locks you in and gets all the chemicals in your body flowing are like the bright lights and the noises and the flashing lights and the bells and whistles and the dings, and that it kind of gets you in the moment. Well, trading platforms do the same thing. Why? Because brokers want you to trade. Why do brokers want you to trade? Not because they necessarily want you to go broke. They can care less. They can make money off you either way, but they want you to execute orders, because each and every time you execute an order, they get paid. So the more orders you execute, the more money you make. Just like casinos, the longer you stay in the casino, hence no windows, no clocks, the more money they can extract from you until you ultimately go broke and they kind of move on to the next person. But in Forex specifically, these heat charts and more importantly, I guess these currency strength charts are pointless, because in the Forex market, the individual strength of a currency doesn't matter too much for a trader. For an investor, if you're doing any carry trades or anything like that, yes, it will make a difference if you're holding long term. But as far as an active trader, so someone that's holding for hours, days, even weeks, it's not going to make too much of a difference because of the uniqueness of the market. You see, unlike, let's say, the stock market, where you may be investing in a Microsoft, or you may be investing in an Apple, or, whatever, in the currency market, you're not necessarily investing in an individual currency. You are trading the battle, the differences, the strength versus the weaknesses of 2 currencies, right? That's why currencies are traded in pairs. So for example, you have the euro dollar or the pound dollar or the Aussie dollar, right? Where the Aussie dollar is a direct kind of battle between the Australian dollar's strength or weakness and the US dollar's strength or weakness. And why it moves on the chart is based on how one is compared to the other. So you can have a very weak Australian dollar, right? Versus, just in general across the board, and a little heat map or the strength chart shows you a negative sign on there. But If we also have a very negative dollar, and let's say the dollar seemed to be more negative than the Australian dollar, right? Well, the Australian dollar is still going to go up. It's still going to have strength versus the US dollar, where versus, let's say, the Japanese yen, it could be weak, right? So I see a lot of traders get into trouble because they're looking at these heat maps, looking at these currency strength deals, and like, well, the thing says the Aussie Australian dollar is supposed to be weak, but why is it going up against the dollar? Well, it's weak, but it's not as weak compared to its counterpart. So those things are completely pointless. If you want to know the individual battle that's happening, if you want to gauge the individual strength that's happening between one currency versus another, look on a price chart. The uniqueness and the cool thing about the Forex market is we can literally bring up that battle between whatever currency pairs you want to make a comparison to, leaving everything else to be pointless. The problem is, again, it looks cool, it's shiny, it's bright, and it creates this bias for us where we see something on a chart or we see something, on this little screener deal, this currency strength deal, and because it shows us one thing, we then take that into the charts, right? This confirmation bias, and think that, well, I can only take a certain action on this certain currency. Because the Australian dollar is weak, I can only look to sell it. Where in reality, you can still look to buy it or sell it. It all depends on who you pair it with. So number one, avoid those. They don't really make any type of difference in Forex trading. Number two, information/opinions, right? Information/opinions, and we'll start with the big one, which is news. In my very beginning trading days, investing days, I had no idea what I was doing. So like most children, and I was a child in this industry, I replicate what I think the adults are doing. So, I think about every movie I've seen. I think about everything I've seen on TV, and what are they doing? Well, they all have these news stations on. They all have these tickers, right? It's all a flood of information at once. So I remember in my first office, I had like 2 TVs and a laptop, and I would have Bloomberg on, I would have CNBC on, I'd have some other live stream on the laptop, and I was just getting hammered with information and opinions from these pundits who I thought were experts at the time, because if you're on TV, you had to be an expert. I'm getting hammered with these opinions, for the full duration of my time in that office. And basically, looking back at it, I'm not even sure if I was aware of it at the time, but I was, again, making my decisions off of what they said. If someone was screaming, buy Apple, then another person was screaming, buy Apple, then a third person would scream, buy Apple, and I'm hearing that in my ear all day, buy Apple, buy Apple, buy Apple, buy Apple. What do you think I'm going to do? Again, I'm going to have this false confirmation bias when I look at a chart. Oh, Apple must be a good buy because everyone is talking about it. And you can insert whatever kind of stock, I was doing stocks at the time, but you can insert any type of stock, commodity, Forex pair in there. And again, we have this outside influence. Something else I was doing is I was spending money on the Wall Street Journal, right? I was buying Wall Street Journals. They'd get delivered to my house every day because, again, I thought I had to read a Wall Street Journal. And the truth of the matter was I was just wasting money as they would pile up in the corner of my office, wasting money that I didn't have at the time. So that's another thing, just information. Kind of another form of information out there is the internet, social media, forums. Trading and investing is a very lonely sport, right? There's not a lot of people that understand what we're doing. There's not a lot of people to talk to. Usually it's just you and your basement and whatever weird TV series you're watching, right? So as human beings, we crave this kind of social interaction, whether it's just to actually take place in a conversation. For you guys that are outgoing, we want to share our opinion, we want to talk, we need human interaction, or if it's just being around human interaction, meaning that, hey, I'm not participating necessarily, but I'm kind of lurking in the background, paying attention. So we gravitate to social media for that, and then we gravitate to these trading forums. And every time you go to a trading forum, they're going to be filled with experts and gurus, right? Pip God and Pip Daddy and the family, and right, Tradezilla, all these people out there who we think are experts because they're the most vocal, right? But in reality, they're not actually that knowledgeable. But the same thing, they are going to spread their opinion, right? They're going to say it over and over. They're going to post, they're going to speak with confidence. And because we don't know better, we're going to start thinking they are like trading gods. And then we put ourselves at, again, a higher chance of being influenced by them. One of the coolest stories I had, not cool at the time, but in hindsight, right? I was one of those lurkers. I'm not really a big social person, but I was lurking in this trading forum because, again, I wanted trading opinion. Just wanted to see what the street was talking about. And I remember for the longest time, I would watch, and one day I was like, you know what? I'm going to participate. I'm going to play my role. I'm going to try and be more active, right? As I, try to develop myself better as a person. And I shared a trading idea. And I was confident. I was like, whew, I did it. I pushed enter. Right? Time to get positive feedback about my idea, right? And the first thing I got was one of the gurus. I'm doing air quotes. You can't see it, but one of the gurus in the chat giving me the opposite opinion. I think I was like, hey guys, I'm getting ready to buy euro dollar. Enter. And then he types in yeah, euro dollars a sell for me. Damn it. And I started second guessing myself, re-looking at my charts, and canceled my order. And of course, it would have been an order that would have went on to win. But you can see I had an outside influence affect my trading, and once again, it had a negative result. And again, these things happen whether you think you're doing it or whether you don't think you're doing it. It's just being in that atmosphere that subconsciously you keep hearing it over and over and over again. You start forming these opinions, and that confirmation bias, the negative version of it, gets stronger and stronger. Now, the last one, and this is going to be, the first two are talking more about time. I guess there's a money aspect in there as well as you making trading mistakes. This one is directly related to money. Something that I thought all traders needed was the biggest, baddest, fanciest trading platform out there. There are a lot of trading platforms out there now, a lot more than, a lot more better ones and a lot cheaper ones as there's more kind of competition in the space. But back when I first got started, there was only a handful, and only a handful were deemed as professional. And of course, right, if I was calling myself a professional trader, I wanted to get a professional platform. And there were ones out there that I was considering spending thousands and thousands and thousands of dollars on. Now, the thing that stopped me was at the time, I didn't have a lot of money to waste on platforms. I did end up finding one that was relatively cheap, and I'm still with that one till, I switched one, but the second one I went to, I'm still with them today. But I was seriously kind of debating taking money out of some investments so I can buy this platform. And it was a platform that had all the bells and whistles. It looked sharp. It looked crisp. There was cool backgrounds. There were all types of indicators. I wasn't even an indicator trader, but the video showed me all these cool indicators, and the lines are crossing and arrows are pointing. There was a news feed. I can click on a tab and it gave me up-to-the-date news, a little scrolling ticker at the bottom of my chart. There were all these bells and whistles like I mentioned earlier, and it just looked like a professional setup. It was something that I was proud to have on my screen, right? And again, in this point in my trading, I'm trying to impress others more than myself. And the weird thing is I'm trying to impress others. I'm picturing like I had two screens at the time, or I'm picturing my two screens with all these fancy bells and whistles. And I remember I'd sit back and be like, yeah, trader. But the interesting thing is like, no one ever even knew I traded, right? No one was in my office trading. I wasn't even impressing anyone. Like my fiance would come in at the time and she didn't care it was on the chart. So like it was only for me. I wasn't even doing any social media stuff. I wasn't teaching or coaching. So I wasn't sharing posts. Like it was literally just me looking at my charts. But I'm trying to impress people with this. And the fact of the matter is I didn't need all of those bells and whistles. I was able to accomplish the same thing off of something that was a third or a quarter of the price. And there are free platforms out there that you can do the same thing on now. But again, as traders, right, and we see this in business a lot. I've started a few businesses in my life. One of the biggest mistakes that we tend to make at the beginning of starting a business is that we get so excited. We take more pride in being business owners, the label, right? Entrepreneur, business owner. We take more pride in that than what our actual business is. So in initial meetings and startups, we think about, oh yeah, we're going to need this. We need that. We need this. We need that. All the things that we think a business should have versus, hey, we know that the beginning stages of a business are the hardest. We know that the first 5 years, you're probably going to fail. Where instead of thinking about what we need to make the business look good, we should be thinking about functionality, right? What are the bare bones things that I need to make my business run? and how can I save all that extra capital in the rainy day fund or investing it into the business, into the things that matter. And trading is the same way. At the beginning of your trading career, you probably, aside from you guys that are going to go on and fail, you probably have the smallest amount of capital available. So if you have the smallest amount of capital available, do you want to spend the highest percent of that on things that hurt you versus help you, or things that don't really help you, I should say? No. Your goal should be, hey, these are the bare minimum things that I need, right? And everything else that I save, I'm going to use that to either recover my account if I blow it or lose money. And again, that is something that's going to happen in your trading career. Or I'm going to keep that money extra so I can start with a bigger account, or after 3 months, 6 months, 9 months, fund myself so I can grow my account. That way I can kind of accelerate my wealth faster and faster and faster. Only at the end, if you need it. And what happens with most traders is we go backwards. Most traders and most business owners, we start off wanting everything. And then after years of experience, we realize we get really cheap and really frugal, right? You would think it's the opposite. You would think that after we start making money, we start getting reckless. Reckless people tend to blow their money before they ever get to the chance to make money. What happens is with most business owners and traders, what you'll see is, like, as we make more money, we realize that less is more, and we start getting even more cheaper, even more frugal. We spend even less because we understand all I need is this and this and this to make it work versus this, this, and this. So as you develop, if you need it, right, you can spend more money on the flashy stuff. But what typically happens is you understand, like, man, I made it this far without that flashy stuff. I can probably even chop even more stuff down, or you can save that extra money for other things. If you're building a business and you need to do marketing, or you need to do this or that, or buy more monitors that most traders do. So think about those 3 things as a newer trader. Think about what you need, what you don't need. You can write it out on a list. That's the thing I like. Write it out on a list, make a kind of a T-chart, and think about the pros and cons, whether it's a platform. What are the pros of having it? How does it help me? How does it hurt me? Do I actually need this? Whether it's currency strengths or whether it's spending time in a forum, right? Think about how it will benefit you versus how it will hurt you. Literally write it out so you can see it, and just make a smart decision before, you make the wrong decision. Hope you guys enjoyed the show. Just a reminder, we're upping the frequency of the Trading Coach podcast thanks to the demand that is out there, right? We started off 2 times a week. We graduated to 3 times a week. Now we are going 5 times a week. So make sure you check it out on your favorite podcasting app. And until next time, plan to trade, trade to plan. Take care.